Hi, I'm Carl Williford. I'm a partner with Williford Houston and Company. Thank you for watching this presentation. Many of you have reached out to us regarding the small business provisions in the recently passed stimulus bills. In an effort to get information and understanding out to all of you as quickly as possible, we felt a need to create a video for you to view at your convenience. We will be glad to have one-on-one discussions with each of you as needed. So let's jump in. So today we want to cover two main topics. First, we want to talk about the sick and family leave under the Families First Corona Response Act. And then we want to talk about SBA loan assistance that's available to many of our small business clients. Please note there are several big income tax changes in these latest bills, and we'll put out some more information about those at a later time. So let's jump in. So regarding the Families First Corona Response Act, there were two separate types of leave created under that act. One expands the Family and Medical Leave Act, and the other one provides an emergency paid sick leave. All of this becomes effective on April the 2nd. Who's eligible or who's covered? Any employee that's been with you for at least 30 days. There are a few exclusions. Any employee who's got to care for a child under the age of 18 in the event that the school has been canceled, which it has been in our area, or a place of care has been closed. Notice that all these provisions we're talking about today are for employers with less than 500 employees. We'll talk a little bit later about how you calculate that. If you have less than 50 employees, you can apply for an exemption from this particular part of the act if you deem it's detrimental to your business. And we'll talk about whether it is or isn't with each of you. So the first part of this, the family medical leave, first things to understand is the first 10 days under this part of the act are unpaid. And that means employee can use their own PTO, their other paid time off for this, but you don't have to cover them. You don't have to pay them for the first 10 days that they're out under this provision. After that, after the first 2 weeks, you do have to cover employees at 2/3 their normal pay rate, up to 10 weeks. After the end of that 12-week period, that first 2 weeks that's unpaid plus the 10 weeks that are paid, after that, you do have to leave their position open, available to them. You can't let them go because they took leave. There is a credit. It's 100% of what you paid them against the payroll taxes that you're making at the same time. So in other words, you don't have to wait until you file a tax return or file a 941 to get a credit. You simply would reduce the payroll tax deposit. Currently, we're working with ADP. They have told us that they have 15 days to get their software together. A lot of people are trying to figure out how they designate that to their payroll provider. We anticipate that sometime next week or late next week, we will have information on how to do that for anybody that we're dealing with their live payroll. So stay tuned for more information about how that will work. Also, there's emergency paid sick leave under this act. It's available for only certain employees. On the screen is listed the 6 different types. The first 3 deal with employees that are themselves are quarantined. The next 3 deal with folks that are dealing with someone who is quarantined or taking care of a child because of a quarantine. Many of you have asked us about how to document this, whether this is happening. We haven't seen a good bit of information on this yet. We're telling our clients, and we tell all of you, to get an email or get something that's a dated note from the employee if they think they were going to be out. For example, number 3 is an employee who's experiencing symptoms of the coronavirus and is seeking a medical diagnosis. So someone may say, I think I have it. I need to quarantine myself and go get diagnosed. Well, they might be out for a while. I would simply get some kind of documentation from them, and I would keep that in your normal payroll records. You may need that later. Again, we don't have guidance yet on how that documentation would be substantiated with the IRS. So get something in writing. It's the takeaway there. So the specifics of this part of the plan is that for full-time employees, you have to provide them 80 hours of paid sick leave if they fall into these categories. If it's a part-time employee, you have to provide a similar amount of time for them. So if you have a permanent part-time person who's maybe working 20 hours every week, you would have to provide 20 hours a week for 2 weeks for them. If it's someone whose time is varying, you would look at an average over the last 6 months. Or if it's someone that you just hired, you'd look at an average or what their expected time would be. So if you told somebody they'd work between 10 and 15 hours, I would presume that you would use a 12 and a half hours for that. Note that you would typically pay an employee their normal pay with a maximum amount that they could receive is $511 a day. For those who are scoring at home, that's $63.875 per hour. And that is if they are under quarantine themselves. Second part of this is if they are caring for someone who's under quarantine, they receive their normal pay, but the maximum amount they can receive is up to $200 a day or $25 an hour. Note that this sick leave must be used before you use the leave under the FMLA that we discussed just a few minutes ago. Again, like the other leave, the FMLA leave, you get a credit of 100% of what you're paying them against payroll taxes. So again, you don't have to wait to file an income tax return, and you don't have to wait to file your 941 to receive some benefit for this or some relief from taxes. So now I want to move into the SBA loan assistance that's available. There are basically two different programs we're talking about here under 7A of the Small Business Association. Small Business Administration, excuse me. The first one's Economic Injury Disaster Loan. That's been around for a long time, so we have some practice on that. I want to cover that for just a little bit. It'll make sense when we get into the Paycheck Protection Program, which is the newest thing. It was just passed by the House just a few months ago. So under the EIDL, it only happens when the governor declares a state of emergency. Roy Cooper has done so. The loans are up to $2 million. The rates are 3.75 for small business or 2.75 for nonprofit. And again, it only applies to folks who have less than 500 employees. Nice thing about this loan, the big takeaway is that the term can be up to 30 years. You do have to have some credit history. You do have to show your ability to repay the loan. There will be normal credit underwriting. So this type of loan will take longer to get, I believe, than the payroll loan. Also note, you got to provide collateral and you have to provide personal guarantees for this loan. So now let's move on to a loan that most of you have been calling us about, the Paycheck Protection Program. This is brand new, and we think this may provide some relief for a lot of folks. Again, it only applies to employees, to those businesses with less than 500 employees. Typically, you count your part-time and full-time employees as one each. In other words, a part-time employee is one person. A full-time employee is one person. You start counting. If you are in the accommodation, hotel, lodging, or if you're in the food service business, you count those employees by location only. So you don't, if you're a restaurant group and you've got 15 restaurants, you just count the employees in each location for purposes of determining whether you're under the 500. That's kind of nice. If you are not in one of those businesses, you have to aggregate all your employees, and you have to aggregate employees from affiliated companies. Those are companies in which you have 50% or more common ownership. So how do we get to the loan amount? The maximum loan amount is 2.5 times the average payroll over the last 12 months. So we take the average monthly payroll over the last 12 months, we multiply times 2.5. What is payroll or payroll expenses? They are the following: wages and salaries, tips, vacation, family sick leave that was paid to employees, severance payments, health care payments that you've made on behalf of employees, like insurance payments, any retirement benefits that you've paid for your employees, any state and local taxes that you paid related to the payroll. That does not include state withholding taxes. That is discussing, in our case, generally state unemployment tax. If you're self-employed, we calculate this as your self-employment earnings, but in no case, either in wages or the self-employment earnings, can we count wages or self-employment earnings over $100,000. In other words, that's just the magic limit. It does not include the FICA taxes that you paid for your employees, FICA or Medicare taxes that you pay for your employees. It does not include wages for any foreign workers. It doesn't include any sick leave that was paid under the FMLA we discussed before, or the qualified family leave we discussed before. So we'd add up all those costs we just discussed. We would multiply it times 2.5. That would give us the maximum amount of the loan. Note, as a borrower, you've got to certify that you're going to use that loan to retain or pay existing employees or rehire employees that you've laid off. One big thing about this kind of loan, there are no personal guarantees and there's no collateral required. You do have to show your ability to repay the loan, but there is an automatic deferment for 6 months. That deferment can go up to 1 year. So in other words, no loan payments are being made for the first 6 months and can go up to 1 year if you ask for a deferment. Now, one of the big things about this loan is it can be completely or partially forgiven. And that forgiveness is determined by how much you've paid for payroll for an 8-week period after you receive the loan. So the loans may be forgiven if the firm uses the loan for payroll costs that we discussed before, interest payments on mortgages related to the business, rent, and utilities. So that's pretty important. However, please note that that amount of forgiveness will be reduced proportionally by any reduction in the employees retained compared to the prior year. So if you were averaging 20 employees before, and after you got this loan, you were averaging 18 employees, then only 90% of this amount that we just discussed could be forgiven against those costs. Also, if you reduce your employees' compensation by more than 25%, there is a reduction in the forgiveness. A key point about this forgiveness, it's not taxable. That will be very important to us as we file tax returns for the next year or for the coming year. Again, you do have to provide some documentation to the loan provider. So let's talk a little bit about that. What do you do now? Well, you're going to need to get your current financial information together. So you need to get your balance sheets, your income statements cleaned up. Most of you have done that. If we've got your business in the cloud and QBO or in a hosted environment, we can help you with that. You will need to get copies of your bank statements, any credit accounts that you have. You will need some information regarding your monthly expenses. Again, most of that, or almost all of that, is going to be provided in your financial document, your financial records, your accounting records. There are some forms we've listed here. We will make those forms available or links available on our website. I also try to send you links in the email that comes with this, that came with this video presentation. Again, this was only meant to give you a broad overview of the different programs under these stimulus packages that are available to you. We're here to help you. We hope that this presentation was helpful to you. And please know, we thank you very much for letting us serve you. We're in this with you together. We're here for you. We are working very late into the evening, so call us anytime. We're here to help. I hope this was helpful to you. Thanks so much. Have a great day.